All right, we're live. What's going on, guys? Hope everyone having a great Monday night. Tonight we have joining us. It's going to be Evan Holladay, awesome guy, developer out of Nashville. Is doing a lot of cool stuff, and is going to be able to touch on a little bit of a different aspect in the real estate world than we've had. Yesterday was really cool because we had Chris Turcotte in talking about what's going on in Canada and Canadian real estate and comparing it to the US market. And now we're going to kind of get into the rental market versus the development market. So yeah, Evan, thanks for hopping on.
Yes, glad to be here, man. Thanks for
Awesome.
having me.
Yeah, thanks for coming on. Why don't we just jump right into it? If you got, 1, 2, 3 minutes, just who you are, what your background is, and kind of what you do.
Yeah, so a little bit about me. So I always like to tell people I got into real estate back in college, which was really for me kind of like just stumbled into it.
Mhm.
I was actually going the pre-med route. So I was, gung ho, wanted to be an anesthesiologist.
Yep.
Went to University of Louisville. And while I was there, I noticed this like massive, like $55 million mixed use,
Mhm.
just like the coolest development you could think of, like student housing, 13 retail locations.
Yep.
They used new market tax credits. They like did a ridiculous deal. And I was like, you know what, that sounds really cool. Like
Mhm.
I want to do something like that.
Yeah.
And I mentioned that to one of my mentors. And just from that conversation, he's like, really? He's like, I know the owner developer. Let me
Oh,
introduce
wow.
you.
That's cool.
Yeah, and I was actually just talking to that same mentor like 3 days ago, and we were just catching up on like how like that literally started a domino effect of where I am today. And yeah, man, it was crazy. I mean, it wasn't like he was like, oh yeah, sure, you're buddies with him, have a job.
Mhm.
It's like he's like, no, you got to impress me, like
Yeah.
get to work and show me your value.
Mhm.
And so we ended up getting a few hundred people out to his groundbreaking
Oh, nice.
after that. So I was basically the first one he hired after he started this development and got it underway. And so I really got to learn, like literally hands on, like watching this foundation come out of the ground from nothing, and coordinating with the retailers, coordinating with leasing up like 380 units, and basically seeing kind of soup to nuts how to run a property,
Mhm.
how not to run a property.
Mhm.
And that kind of got me pumped up about real estate. And like since that point, I was like, all right, I'm all in. Real estate's my thing. Like this is what I love to do. And from there, myself and a few others, we started a modular development company in college. And we actually took the same layout as a houseboat.
Okay.
And there's a bunch of houseboat manufacturing plants in Kentucky. And we basically said, how can we put those same people back to work? They laid off 1,100 workers.
Oh, wow.
Like, how can we put those people back to work and use the same facilities that are now dormant and use the same layout as a houseboat even, and say, let's basically make a modular unit, a housing unit, instead of an actual houseboat.
That's
So
really
we made some
interesting.
single family. We started out with single family, and then we're trying to scale that to multifamily. And then another group is like, hey, how about you come do that same thing with us?
Mhm.
And really just kind of learn the ropes of like mixed income housing, affordable housing, tax credits, and really just like the whole gamut of like how to make housing work for families that couldn't normally afford quality, decent housing, brand new housing,
Yeah.
and couldn't afford a good quality place to call home. And we're now able to give that to them, and it's brand new and quality at a reasonable price.
Love it.
And so really got to work through all like the public-private partnerships. And so now today we've done, over 1,300 units and really kind of learned soup to nuts. And now we have Holladay Ventures where we're working on deals throughout the Southeast. And then of course, Monumental podcast,
Yeah, man.
bringing it up and yeah, that's about it, man.
Awesome. Cool. So just for context, the 1,300 units or whatever, is that already built and rented out? Is it some of it's in the pipeline? Is it all that single family stuff? Is some of it multifamily? Just a little bit more context.
Yeah. So 1,300 units, they're all basically closed. Of that, I think there's about 400 that's still under construction. Okay. But the other 900 that's already built, and most all of it's stabilized. Gotcha. So it basically takes the process. It takes like 2 to 3 years for pre-development, 1.5 years for construction, and then like 2 years for a lease up. So yeah, and then we have, I think, about 1,200 units in the pipeline right now.
Oh, wow.
That we're working on for probably late 2020 and all of 2021 closings.
Love it. So obviously you're coming on our podcast, so I'm going to dig into that a lot more when we do that. This is not that though. Really want to focus more on the pandemic side of things and what's been going on and what you've been seeing. So can you tell me a little bit, it's now April 13th when we're recording this. And can you talk a little bit about what's been going on over the last few or several weeks? What you guys saw, what you did, what are your collections been like? What are you seeing from tenants, et cetera, et cetera?
Yeah, it's been interesting. Collections have been better than we expected, but basically, per project, we're getting the help of each lender to either do like interest only, especially like the local,
Gotcha.
community banks, the local banks. They're really willing to work with you.
Yeah.
They're usually the most flexible and the easiest to adapt. So that's been mostly, for the most part, we've come out unscathed there. As far as like really going forward and kind of what we're seeing, it seems like nobody knows what the heck's going on. Like I was talking to a lender of ours at Citibank, and he's basically like, he's like, I can't even give term sheets on anything right now because I don't know what the heck our bank is actually going to approve. He's like, I could give you something, but it's not going to be, it's not going to be any form of reality.
Yeah.
So yeah, I mean, it's just kind of like we have one acquisition under contract now, but we're kind of slow playing it because we can't even do a site visit.
Yeah.
But the other development stuff, we're still pushing ahead as much as we can, but yet trying to spend as little money as we can. It's kind of like we're squeezing the belt, but still trying to push forward as much as possible. Because there's a lot of like due diligence, there's a lot of plans you have to invest in, but we're basically trying to get the buy-in of our architects and engineers to say, hey, can you guys take a little bit of this risk with us? This is a weird thing going on here. Can we split the risk? And we'll give you like an upside bonus. If we get this thing closed, you guys will get an incentive fee. But yet if we don't close, then, either part of your fee you guys will take the risk on, or even potentially all the fee. Gotcha. So that's something we've been going through, try to lower our risk, but still move things forward.
Interesting. So all these deals you have in the pipeline or in the process of various stages of development, what's been happening? Is your timeline been pushed significantly? Is it still like, up in the air where maybe you've been halted a little bit? Like, I don't know what construction is like. I don't know if, like government offices locally are open and stuff like that.
Yeah, that's been kind of the weird, like one of the unknowns. So anything that needs like preliminary government approval, it really just comes down to like the local jurisdiction. Yeah. So we have like, some cities where we're doing Zoom meetings for city meetings, which is like
crazy. Yeah.
Like blowing my mind. I'm like, whoa, like we can now do like online city meetings and get approvals. I was like, that was never in the realm of possibility before. And that could be a game changer if people like actually move that forward. I mean, from that aspect, there's been certain things where we're still moving forward. But there's definitely been, that same city council has now told me, I was like, hey, are we, still progressing towards this approval we need? And they're like, hey, they're an economic development, community development organization as well. And they're like, hey, we've been basically trying to figure out how to help all of our businesses in our county try to apply for PPP, apply for SBA. They're like, that's our main priority right now. We love your project, but that's not a priority. Sorry.
No, of course.
So it's like, we're moving forward, 2 steps forward, 1 step back. But yeah, I mean, anything with zoning or planning has completely shut down.
Gotcha.
Because that all has to be in person. And then also sometimes we're asking for, on these affordable projects, we're asking for tax abatements, and basically city government's like, hey, we got to figure out our budget first before we talk about like, giving you no taxes for the next 5 to 10 years.
Did you have any projects that had already secured that tax abatement and they've now waffled on it or backed away from it, or you hadn't gotten that far yet?
We didn't have any in the pipeline that had that already secured. We had some that were basically like it's kind of interesting. We had one that was like, "Hey, we'll tell you in a month," and then
Mhm.
of course
Yeah.
COVID-19 happens, and that month gets turned into probably a few months now.
Yeah. Could be even
Um,
longer.
yeah, exactly. So I think what we're dealing with now is like everything's slowed down at least for a few months.
Hmm.
We're trying to push forward on things that don't need approvals, like plans, and basically dealing with like third party due diligence,
Hmm.
different things like that, where you can do stuff over Zoom or phone, but you don't have to rely on like a city approval.
Gotcha. Now, most of your stuff or all of it, and tell me what it is, has some sort of affordable component to it, correct?
Yeah, yeah. Most of it does. I'd say like 80%, 80%
Okay.
of what we do.
Okay. So does that mean all of the tenants have some sort of like their rent is being, either co-paid by the government or all of it's being paid by the government, or it's just a contract on the property?
Yeah, so that's actually like one of the things that is like not fully understood by most people is like when you say affordable, there's like there's a
So
hundred different
many. Yeah.
definitions of what affordable is,
Yeah.
and so when we say we're doing affordable or a workforce or attainable, what we really target is families making basically like from we call it like 30,000 to like 70,000 income,
Hmm.
depending on your family size. But it's really like the kind of the middle income range where it's families working. They basically have to pay for their own rent. It's not free rent. It's not government paid rent.
Gotcha.
Um, but it's basically us saying, hey, the government is helping us pay for this either through tax abatements or tax credits, and in return, we're going to help keep your rent at a low enough level where
Hmm.
you're only paying 30% of your monthly paycheck every month.
Gotcha.
So it's a way for basically just to make sure like
So
people
they,
aren't spending a crazy amount on their rent and they still have enough income to pay for other things.
so if I'm hearing it right, it sounds like most of your stuff's got some sort of tax benefit. And because of that, the government is restricting what you can charge in rent based on the income they get. So a lot of like sometimes it's
Right,
like
right.
50% of the area median income or like 75%. Is that how it's worked out?
Yeah, exactly. So we do 60% is when you start earning tax credits.
Okay.
So that's really the target. But there's so many nuances to it. But we can go
Of
up
course.
to
Yeah.
like 80% and still get credits.
Gotcha.
If you basically have to balance out to 60% though.
Gotcha. Yeah. So that's interesting. And what is it? They still have to qualify for like 3X, whatever it is, or no?
Yeah, basically they just have to make sure they're making more or less three times the rent in monthly income.
Gotcha. Okay, cool. So that's interesting to hear. How has it been like with your tenant base and people filing for, first of all, where is everything in and around Nashville, or is it more spread out than that?
So it's Tennessee and Louisiana right now.
Okay. And then how has it been? I know we touched on it very quickly, but just curious to hear what has collections actually been like compared to previous months? Is it very similar, slightly worse, way worse? I know you said it wasn't as bad, but can you give a little bit more color if you're able?
Yeah. So as far as specifics, I think we're like a few percentage points lower than we typically are.
Hmm.
But it's really just based on a lot of our. So we do affordable, but there are still some residents that have vouchers.
Okay.
So we
Gotcha.
don't necessarily serve 100% voucher based community, but we still have individuals that will apply and will have their own voucher. They'll bring it with them.
Hmm.
So we definitely have, kind of like you mentioned before we jumped on, like we have probably more than the average owner, more reliance on vouchers
Hmm.
because we're serving a workforce population.
Yep.
So that ends up, I think, actually helping our rent rolls, now and going forward.
Yeah, it's funny. I've seen a bunch of memes going around. Like everyone's going to be looking for Section 8 tenants now and like affordable tenants because
Oh yeah, yeah, yeah.
everyone's here, and the government pretty much paid when they were supposed to for this month. Who knows going forward what'll happen. What percentage would you say roughly is some sort of voucher?
It honestly depends on the property. It varies
Like
magnificent.
across all the units roughly?
Across the whole portfolio, probably 30 to 40%.
Okay, cool. Awesome. And I'm assuming nothing there has changed with the payments from whatever voucher program, correct? That hasn't been affected?
No,
Okay,
no.
good. Glad to hear. Awesome. It's interesting. I know I want to almost dive in and like explain what you were talking about with all the affordable stuff, because I understand it, but I only understand it because I know I have the background. So when you come on or I come on your podcast, whatever we do,
Yeah,
we'll
yeah,
have to
yeah.
dive in
We'll
and explain it
definitely
for
deep
people,
dive.
because it does get confusing, and I'm pretty sure I understand everything you're talking about now. So just very quickly want to touch on going forward. Obviously you got a lot of stuff in the pipeline. Are you worried at all about, what the demand for new units is going to be in the future? Are you reevaluating deals? Have you tried to negotiate pricing on some deals or worked out new pricing with contractors? Have you seen any indications on like material costs changing, obviously with supply chains, and I'm sure tariffs have changed, and, demand has changed, and, worker, like people don't have jobs in the construction worker. Do you see that stuff changing? Like, everything I just threw at you, whatever hit your brain, tell us.
I would say yes, 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 and yes. Yeah, man, exactly. You hit it spot on. Like, basically, there's going to be a whole lot of shift in every direction, and I think you're basically per project trying to basically turn this into as good a situation as you can.
Mm-hmm.
And like we were just talking about, like we're on certain projects, we're renegotiating with some of our contractors on the pre-development side and even on the construction side. I mean, we're going to basically bring a project out to bid,
Mm-hmm.
usually doing that a couple months before you actually close on something.
Sure.
And I imagine that we're going to get a lot better pricing in the next few months than we would have 3 months ago.
Yeah.
I don't know honestly what it's going to be, but I can imagine a lot of groups are going to be like, hey, we don't know where our next project's going to be after we finish the one we're on now.
Mm-hmm.
We better take what we can get, because who knows if and when other projects are going to come up.
Yeah, for sure.
And I've heard, as far as pricing on materials, I've heard lumber's already starting to come down.
Okay.
I don't really follow that too closely. I really just rely on my contractors to
Sure.
give me the ups and downs. But and then as far as like the niche that we're in, it's kind of it's an unfortunate series of events, but like I'm really excited about this opportunity, because the need for workforce housing is more than it's ever going to be, maybe in our lifetime. Like it is just ridiculous, because there was already a crisis of housing, literally, hundreds of thousands or millions of families across the country. In Nashville alone, we had 31,000 that were basically paying like 60% or more of their paycheck to their rent, because the rents have skyrocketed and the incomes have pretty much stayed stagnant.
Mm-hmm.
And that's a nationwide thing. That's really an international thing.
Yeah.
But if you take that and you say, okay, well, that was like pre-COVID. And then you say, okay, 40% or so of renters can't afford a $400 unexpected expense.
Mm-hmm.
And then you throw in 3 months of no income and the rent or their expenses just staying level. It's like, that just is a recipe for crazy, like it's just throwing the whole world out of order. Yeah. And so you take that in and you say, well, who are the people that are actually going to get hurt the most, feel the most pain from this COVID-19 and this craziness and this economic shutdown? It's those at the bottom 50% of the economic ladder. That's exactly the people that we serve and we provide housing for. So in one sense, I think it's definitely going to hurt their income and it's going to hurt their ability to pay for their own rent. But I also feel like this is really going to open up like this like wave of change as far as like how people respect and think about housing, because it literally is all we have right now. Like think about that. It's all everybody's spending 24/7 in their house.
Yeah.
Why are we not putting more into providing affordable housing and attainable housing and creating like basically using that as saying, hey, let's actually take care of our workers. Let's take care of the people that help run our economy and make sure they're not priced out and live 2 hours outside of town because that's the only place they can afford. And so I think this is going to bring to light the need even more so than before of affordable and workforce housing. So I'm excited from that standpoint. I've heard that the next CARES round should have some more like grants or stimulus around affordable housing.
Interesting.
So I hope that I hope that comes true.
Yeah, that'd be great for you
But
guys.
we'll see.
Yeah, I know. I thought of several things while you were talking. One quick thing that I thought was interesting. Saw an article the other day. There's a development, an affordable development somewhere in California. I want to say it might have been like the Bay Area or LA, one of the higher cost ones. Because of the restrictions they placed on this affordable housing development, their cost to build per unit is now up to $1.1 million per unit to build. And I'm just like,
Oh wow.
that's crazy. How are you supposed to build affordable housing when it costs you over $1 million
Yeah.
to build each one? The economics just don't work. You can't have, an affordable rent when it costs you over $1 million to build. That's just ridiculous. The other thing that I thought was interesting as you were talking was, a bunch of us were talking, I think it was actually in the mastermind. I don't know if you were there, but we were saying that unfortunately, a lot of the blue collar workforce stuff is not jobs that are easily transferable to a work from home situation. Whereas
Yeah.
like from everything I've been told, I was around, but I wasn't really working yet or an adult or really paying attention. '08 crash, there was a lot of white collar jobs that got hurt because financial and stuff like that. This
Right.
was
Right.
more
Right.
of, hey, if I work for a finance company or a marketing firm or I work in real estate or stuff, a lot of that stuff you can kind of start working from home. Agents get hurt, stuff like that. But a lot of that stuff you can shift work from home.
Yeah.
The janitor, the retail worker, the air hostess, like those things you can't really do from online. So we were kind of saying like we could see like the B class, B plus class being the most well insulated because it's going to have that good mix of not being hit from nobody wanting the luxury stuff. You're going to have that trickle down from the class A, but you're also going to have a very good diversity of those white collar workers who are going to be able to shift to working from home. So no, I definitely agree. I think, affordable housing has been a big problem in this country for years and years and years. Ever since I've started, that's always been a thing. Even the demand for housing isn't keeping pace with the country. So,
Yeah. Yeah.
um,
That's really what it boils down to, right? It's just
yeah,
supply and demand at the end of the day, but we can't possibly build fast enough to the actual demand.
yeah, no, I think, there's going to have to be some sort of fundamental shift in affordable housing and how the government takes an active role because unless the cost to build just gets, dramatically decreased, which
Yeah.
I don't necessarily see,
Yeah.
unless this goes so long and there's just a stockpile of, material that now you can buy it for 20 cents on the dollar.
Well, yeah, but then you throw in the land cost, which is very elastic. That can change
Yeah.
within very quickly, and then also like the process of development is very slow and
Mm-hmm.
arduous. So
No, I
something
know.
you start today doesn't actually make an impact on demand or supply for another 2 or 3 or 4 years.
Yeah, I know. It's interesting to see because one of the things that I really liked as I got involved was within like a year of when I started, we started looking at Jacksonville, Florida. And at the time, Jacksonville was still a market that was like the redheaded stepchild to like Orlando and Tampa. It was like no one really
Yeah,
wanted to be there, but there was some opportunity. And like ever since our first deal, within like a few months after that, a lot of money started getting pumped in. And then all of a sudden you just started seeing the development pipeline pump up and up and up and up. And it was that 3-year delay that now it's like the peak of all the units coming online. So obviously
yeah,
a lot were already in the works. But it's always been interesting of like, you see, development kind of lags because you've got to see the indicators of growth and supply and demand and that, the absorption's there, but then it takes, like you said, a few years to, you know, get it ready for actual breaking ground, a
yeah,
year, 2 years to actually build up. And then, a year and a half, 2 years to lease up, stabilize. It's taken longer for people to sell because now people are selling buildings in lease up, which is crazy.
yeah.
But no, I think, no, it makes a ton of sense. How about from like the personal side, the local side of things? Obviously are you in the city of Nashville or are you like outside in the suburbs?
Yeah, so we're probably 8 minutes from downtown.
Okay, cool.
Um,
What's it
so yeah,
what's it
we're
been like for you guys the last few weeks from
yeah,
like a how's the government done? How's the area done? How's it been? Stuff like that.
Well, from what I've been told, Tennessee's not doing too well. They're having a lot of cases, kind of like New
Yeah.
York.
Hmm.
But yeah, I mean, for the most part, we're fortunate. We're blessed that we already worked from home.
Hmm.
I have a nice office where I was already working out of, so it hasn't changed too much our lifestyle, other than like I would literally do in-person meetings, 3, 4, 5 times a day,
Hmm.
and those all pretty much just got wiped out. And so a lot more calls, a lot more Zoom, a lot more just catching up with people. It's basically, I feel like I've been working double time, because it's like I'm trying to figure out, one, where the opportunity is.
Hmm.
I'm two, trying to figure out where everybody's head is at on this, from our lenders to our equity partners to our brokers. Basically all the funnels into our deal. Where is everybody, and what are they thinking? What is their thought on everything? And also tapping into masterminds, figuring out where everybody's head is at it. Like people I look up to, my peers, even my mentors. Like last week, I literally was back to back to back to back calls of just like, hey, what are your thoughts on this? Where do you think opportunity is in this? How can we protect ourselves? How can we make the most of this? And how are you doing? How's your family doing? Just connecting with people, and
Hmm.
basically figuring out how we can all make the most of this weird situation we're in. And then also at the same time, like figuring out how we can basically double down on a lot of areas that we've been trying to work on. Like, for example, like I've been trying to finish up my website rebrand for the longest time. And I'm like, great, like I have a bunch of time at the house. I can't go
Yeah.
to any meetings. Let me get that done. Let me knock it out. And same with like systems and SOPs and processes, like figuring out how we can knock some of that stuff out while I have a little extra time in front of a computer,
Hmm.
and try to get it done before we get back to normal and I'm filled with meetings again.
Yeah, no, that's something we've been doing as well. Just like something I've encouraging everybody to do. It's like you've got all this time now, and it's like,
Yeah.
it was always like, hey, if you're home and you're watching Netflix, like do something. But it was always like, I came from work. I don't want to do it at home. Like came from the office. Now it's like you're stuck. You're at your
Yeah.
office
You got
slash
no
home.
choice.
If you're bored, like there's only so much Netflix you can watch every single
Yeah.
day. So I mean, it's funny. I'll be like on the couch at like 9:30. I'm like, I don't know what to do. I was like, all right, I guess I'll just do some work. Like, might as well. I got nothing better to do. But yeah, we're doing the same thing. We're like trying to double down on things that we've said for, you know, 6 months, 12 months, 24 months. Like, hey, this is something we should do. But it's like, we've got this deal to do, and that, this money to raise, and this deal to sell. And it's
Yeah,
like, that's
exactly.
kind of all halted. We are supposed to be, fingers crossed, closing on a deal tomorrow. We've had under contract for 4 months. So
Nice.
hopefully that goes through. But, that stuff's basically been, teed up, ready to go for the last 4 weeks. So, besides that, it's like, there's not a lot to do. Like you said, a lot of stuff is dried up. Tough to buy a deal because you have no idea what the debt's going to be. Tough to buy something right now because no one's really going to be in trouble yet. They shouldn't be unless they were really, really in trouble already. So it's not like there's like, tons of distressed opportunities out there, and except maybe in the hotel space and the retail space, but that's not anything we're in. So it's like, okay, don't really expect any, real opportunities yet. Does take a little bit longer. So it's like we're kind of in a holding pattern right now from that side. Besides, obviously, an hour or two a day, looking at our own deals, but there's only so much you can look at on a daily basis for your own stuff. Like the collections are what the collections are, the rent roll is
Yeah.
what it is. Expenses are what they are. There's only so many times you can call your lender and your investors and your property managers. And then eventually you're just, you're beating a dead horse. So it's like, you got to almost create work or, find opportunities to make yourselves better. So when this comes away, you've got a really good platform to jump off of, and kind of springboard into whatever the next opportunities are. Curious though, some of the other people you've spoken to, your mentors and stuff like that, is there any common theme you've heard for them? Any good advice they gave you that you think would be good for other people to hear?
Yeah, I would say a couple things. One, just a overarching theme that one of my mentors told me is like, good people will do great things.
Mm-hmm.
And that just reminded me, like, this period of time will show you who your true friends are, who your true partners are. It'll show you people's true character. Because I think we're put in a weird situation, and for some people, for some businesses, maybe a really tough situation. And I think in those times is when you figure out who real people are, and really who you are too.
Mm-hmm.
So that was one thing. The other thing is that I think, I'm sure you've talked about it too, but May is going to be a whole lot more painful. Everybody's saying that. And I think probably what I've heard from a lot of pretty seasoned operators is that there's going to be some sort of correction after May of pricing and also cap rates.
Mm-hmm.
And so you're right, exactly what you said. It's like buying right now. You don't really know what you're buying because cap rates could change and then your value could immediately
Mm-hmm.
change just like that. And so I think a lot of people, probably 80% of people, are holding and just trying to figure out what to do and
Mm-hmm.
working on their business and working on their systems. And 20% of them are still looking for deals, but with a very aggressive mindset of like, hey, I'm gonna do everything I can.
Mm-hmm.
Like the deal we had, we basically it was already signed LOI before all this happened. Took us like the last 3 weeks to sign the PSA because we're like, well, I can't sign that LOI anymore.
Yeah.
We have to basically get almost double the due diligence period and not have any deposits go hard, because it does not make any sense for us to take
No.
any risk right now. We'll look at it, but I'm not going to put a lot of our money and time and energy into it until we know what the heck's going on. But I also think at the end of the day, like every investor I've talked to is like, hey, we're still going to be looking for deals. We're not slowing down. In a couple months, we're going to be we're trying to plant seeds now with all of our investors, finding the right investors, lining up the ones that do have capital,
Mm-hmm.
and using this time to build and foster those relationships. So that way, when the opportunities do come, 2, 3, 4 months from now, that you're going to be well positioned to make quick moves on it instead of being flat-footed.
Yeah, I love it. No, I think that's all really good stuff. I tend to agree. I think a lot of people are also saying they're ready to buy, but I think a lot of people, if the opportunity came, would not be ready. And I don't think it's necessarily easy to either. And a lot of it's going to be out of people's control too. Like you said, you put a property under contract today. By the time you get a loan commitment in, 30 days, 45
Yeah.
days, whatever it is, 15 days, depending on how quickly you try to close, even by the time you get the loan commitment, it can be one thing. And by the time you close, it could be a totally another thing. So you're going to have to be super flexible. You're going to have very conservative underwriting. All the agency loans right now are requiring a ridiculous principal and interest reserve, anywhere
Yeah.
from 6 to 18 months. So, that's going to seriously affect any valuation.
Exactly.
So yeah, I think it's just going to be really tough until some of the stuff kind of levels out. I think it's going to be really tough to buy any deal unless it's at a steep discount to what people think the market was or even the market is, because it's got to make sense for it's almost got to be a no-brainer for everybody involved. Otherwise,
Yeah.
there's too much uncertainty right now. So I do think it'll take until we start seeing that flattening, a plan for the economy to start rolling back out, for some of those jobs that were lost or furloughed to start, coming back, and you see unemployment and jobless claims kind of peak. I think that's when you'll start to see a lot of people, will be a little bit more opportunistic then, because they're like, okay, now we see the light, the end of the tunnel is getting closer. Where now I don't think anybody really sees that unless a really, really steep discount. So no, I totally agree.
Where do you see opportunity in the next 6, 12 months?
It's so tough. I think where you're going to see a lot of is people that had very aggressive bridge loans on value add properties, where they're now stuck because they didn't bring any extra capital to the table.
Yeah.
They don't have
No
anybody
reserves
to do the renovations, or they can't do the renovations because areas locked down, and they're going to start fumbling, right? Like agencies, if you prove it, pretty much have to give you some sort of forbearance. Bridge lender, CMBS lender, they're not under those same restrictions. So, does anybody want to foreclose? No, but they can, make your life significantly harder. And if you've been a shitty partner for the last, 6 months, 12
Yeah.
months, they're going to use whatever they can to get you out or force a sale or, recoup their
Yeah.
money. So, I could see that where people took on bigger projects than they were ready for, weren't well capitalized enough, got stuck because they, a lot of times you need to hit certain debt service coverage ratios in the future. So if you can't hit that, stuff like that. So, but the other thing I do know is like the stimulus package, the extra $600 a week for unemployment, a lot of C-class stuff. If they can get, this is what I've been harping on this whole week. So anybody who's listened is going to feel like I'm repeating myself, and I am. As long as they can actually get those checks out, the $600 a week extra on top of unemployment, a lot of C-class operators are going to be okay for at least the next month, 2 or 3, because that's, basically covering the rent. You're talking about you can afford an $800 a month rent. And if you're one, a single person, you're getting $800, $600 a week that qualifies you for that. So
Yeah.
as long as the system's in place to get that money out to people, a lot of people will be saved. If it's still overwhelmed and stuff comes up, then not. It also depends how long this goes, but I see that obviously retail and hotels have been absolutely decimated. So, there's opportunity there, but that's not a space we're in. We do know someone that has some experience in hotels. So we've thought about having a conversation with them and seeing if it's even worth our time to explore and, maybe pick up, try to pick up like some smaller assets just with some personal capital or some really close investors, and just being like, hey, there's probably opportunity here. Who knows if we know what we're doing, but let's take a shot and see if we can do it. But obviously, again, we're not the perfect buyer, so it'd have to be interesting. Other than that, I think where you're going to find people in trouble is, again, the reserves is going to be a big one. I think if people overpromised, they're gonna get in trouble when they try to exit, and their ability to refinance. But I don't know if that's necessarily going to lead to opportunity. Any developments that were coming out of lease up right now, it's going to be very tough. I don't know. Those are the big ones right now for me. But we haven't seen anything come through. Who knows? A lot's going to depend on what they continue to implement and roll out and stuff like that. Right now, they're supporting everything as best they can. So as long as that stuff stays in place, I think a lot of people that probably wouldn't have come through this period are going to actually come through this, relatively unscathed.
And I think the interesting thing about what we're going through is that a lot of private equity, a lot of big money hedge funds, they've all been stockpiling money.
Mm-hmm.
Billions and billions and hundreds of billions of dollars basically been stockpiled for this moment. They didn't
Mm-hmm.
know it was going to look like this, but they knew something was going to go down, and now they're ready to pounce.
Mm-hmm.
The amount of money Blackstone and all those guys have is just stupid.
Mm-hmm.
And they're ready to pounce on distressed assets. So it'll be interesting because I don't think that was as much the case in 2008, where they had as much stockpiled. I don't know the numbers, but
yeah, I don't know either. That would be something interesting to look at. I do think there are going to be some people who I think thought they were going to cut expenses during this period, and they're going to be sorely mistaken, where they probably would have been helped out by like some organic rent growth and like cap rates staying compressed and stuff like that. I think those people are going to get in trouble actually too. So like if you have somebody that was like, didn't understand taxes, or just thought they could shave payroll, or, thought they could come in and lower like marketing expense, like, yeah, maybe, but I bet there's a bunch of people that thought they could and can't. So that's definitely a possibility too, right? If your expenses are getting too high and your economic, if May gets worse and what comes after May? June. If June gets worse, I was going to say April. And I was like, there's no way that's right. And if they just get worse, or like, the unemployment dollars start running out, those people are going to be in trouble because they're going to have a really high break-even occupancy number, and they're going to suffer. So it really depends on a lot of that stuff. But also, man, I think that's a really good place to wrap up. Not trying to do this forever. Obviously, anybody watching can click the Instagram bubble and go follow you. But if anybody's watching on the Zoom call we're recording for YouTube, where can people follow you? Where can they learn more about you? Where can they listen to your podcast? Stuff like that.
Yeah. So again, thank you for having me on, man. I appreciate
of course.
that. Also, follow me on basically a podcast, Monumental podcast, Top 200 podcast. Chris is coming on soon.
I am.
So be on the lookout for that episode.
We're going to drop that ranking down to 500 in one episode.
Yeah, right. I love it. But that's evanholladay.com. Also, any coaching, that's coachwithevan.com. And then if you're interested in investing in some of the affordable workforce housing deals, that is holladayventures.com.
Awesome. Love it. Last thing, do you have any words of wisdom, advice, thoughts, just to kind of leave us off with?
Biggest thing, this too shall pass. I think that's a very applicable phrase, especially now, but at any point in your life. It's just remember that and don't take things too seriously, and know that this too shall pass. We're going to figure out a way through this and actually come out a whole lot better for it. And it's going to give us really an experience that nobody can ever take away from us. And I think we're all going to be better for that experience.
Love it. Guys, if you're already not following Evan, make sure you go do it. Go check out his stuff. If you're watching on IG Live, thank you for tuning in. If you're watching the recorded version, be sure to follow, subscribe, and all that fun stuff. Thank you guys for watching.